A very good morning to all our viewers. Welcome to Morning Trade with me, Stacey Pereira, right here live on Moneycontrol. Well, I'm here to help you navigate through this trading day bright and early this Monday morning with actionable trading strategies as well as sectoral trends and most importantly, your queries during the course of the show. So guys, keep commenting on our live stream and we'll have those addressed by our guest on the show. But before we bring them on board, let's see what we have from the global handover and what that is looking like today. Well, let's see. NASDAQ and the S&P 500, both those indices closed lower on Friday for the second straight week, we could say. Wall Street, there that rally really faltering. The Dow Jones, however, is the only one that has gained for about 4 days in 4 sessions in the last 5 days. Now, stocks, though, in the Asia-Pacific region, those ones have largely opened lower ahead of that key macroeconomic data from China as well as Japan. The GIFT Nifty here, though, is indicating a lower start for this truncated week, even for the Indian markets. And industrial output growth, that or IIP as we know it, that one for June has come in at a 3-month low of 3.7% as manufacturing activity has really slowed down. All eyes, though, will now shift and focus will now shift on the CPI inflation for July, which is likely to come in at 6.6%, significant up move from the 4.8% that we saw in June, largely led by the surge in food prices, those tomato prices that were really soaring, which has been projected food inflation at about 9% on a sequential basis. And ONGC's numbers, those one comfortably beating estimate in a first quarter that was quite strong for the oil company. Now, in key earnings today, though, we'll be looking at ITC, which is expected to report a good performance, while the street is expecting a sequential margin expansion from pharma major DIVI'S Lab. Well, we have a lot lined up, a new day, a new week, so a lot to be looking forward to how markets are really transpiring. But like we were just talking about a short while back, we have key earnings today, one of them being of FMCG as well as, the conglomerate ITC, which has just recently announced its demerger as well. So a lot that, investors and stakeholders will be looking forward to in what really transpires in their Q1 results. But that will also be a stock that you need to be keeping out on your radar. That's because just over the weekend, we heard that shareholders have given their approval for the reappointment of Sanjeev Puri as the MD and chairman of ITC for another 5 years. And this will come into effect only on 22nd of July from 2024. So we have a long term and we are going to see Sanjeev Puri at the helm of affairs at ITC for quite some time now. But the shareholders have also given approval for the company for the appointment of Hemant Malik as a whole-time director as well as Alka Mirzaban Barucha, who will now be appointed as an independent director. Now, all of this also comes amidst that Q1 that we're looking forward to. And so far, if you have to take a comparison of where we've seen FMCG companies, I'm just talking about the FMCG pack for now for ITC, although we do know that their major revenue and profits comes from that cigarette business. But let's look at the overall number. We are looking at a PAT to see a rise of about 15% on a YOY basis, though we are looking at muted sales now. This also because we are seeing some bit of inflation that could really kick in, not just for the FMCG part, but also for raw materials and for cigarettes, which normally is, shows that steady growth, but we could see that number slightly lower. But are we going to see a double-digit growth in terms of its profits? That's something that everyone's going to keep their eyes out for. And, also see that volume growth number, because so far, if you look at FMCG companies, they haven't shown much when it comes to volume growth in Q1. So we'll have to see how the cigarette business does, how the hotel business now with those demerger talks, how soon and what really is going to come off that. All of that is something that we're going to be looking forward to. And to join me to decode all of this now is Priyam Tholia. He's a senior research analyst and FMCG who tracks FMCG at Axis Securities. So Priyam, thank you so much for giving us your time and speaking with us live here on Moneycontrol this morning. But do tell us your overall, on first looks, how are you looking at ITC? It's been a stock that has seen quite a bit of, run up as well as consolidation, but that run up coming, only in the last few months, we could say, really. So for Q1, if you're going to judge it, what really should one be looking out for?
So firstly, we'll take a look at, and good morning. So first we'll take a look at the preview part of the results. So like you said that on your earlier remarks that sales are likely to be remain muted. However, the PAT will be led by the ITC cigarettes business, which we expect that the PAT to grow, overall PAT to grow at 14% for us. However, the muted sales growth will be impacted by the agri business. Largely and paperboard business. However, the rest of the business are likely to see a strong growth. So now coming on the ITC on a long-term basis, so we continue to remain positive on the company given the fact that all the levers, all the factors for the companies are on the firing. If you see from the cigarettes perspective, cigarettes volumes we expect that are likely to continue given that they are continue to gain market share from the illegal cigarette players due to the stable taxation. Secondly, on the FMCG part, so we believe that after hotel, the ITC's main focus would be on the FMCG business, as though it has reached a level where it can sustain on its own cash flows, but there is a huge leg room for the FMCG business to grow. Thirdly, on the hotel business, as the hotel business is going to demerge, the impact on the ratios, because the hotel business contributed 20% of their capex on the ITC's balance sheet, while the profit or EBIT is less than 5%. So we believe that the overall return ratios are likely to improve for the ITC, the parent company, which will boost the further stock price movement.
Priyam, if I can get your view on, just their cigarette business, because that's the one that really drives their growth, about 70% of that profit coming just from the cigarette business. So give us a lowdown on how this is really going to turn out. Is this going to be that factor really even in quarter one, even though we're hearing of at least buzz saying that, volumes growth is going to be muted even for the cigarette business this time around?
So we believe that the cigarettes volume growth are likely to be in the mid-single digit, mid-single digit. So we believe that the cigarettes volume are likely to continue going ahead. See, the interesting point is that since last 2-3 years, there is a stable taxation, due to which the branded players like ITC are likely to gain market share from the illegal trade, because illegal players are likely to get impact. They were taking the advantage earlier due to higher taxation, and as these players were not able to take that advantage, now the level playing field is set. So we believe that branded players are likely to see continued volume growth plus market share gains.
Right. Okay, let's look at the FMCG business now, and because I'm looking at what their EBIT margins just for FMCG could be. There were also talks, when this demerger of the hotels business came, there were also talks that, even they should look to even hive off other businesses like FMCG. But if you're looking at what estimates are suggesting for Q1, just about 4.6% in EBIT margins, how is one supposed to be looking at margins when it comes to FMCG business for ITC?
So FMCG business margins, though, are in the improving trend, but we will see on a quarter-on-quarter basis that can be a volatility on the margins front. But on a yearly basis, if you see the margins, they are likely to improve on a steady-state basis. Also, the thing what will drive the margins for the FMCG business is the company's continued focus on cost efficiencies and plus the premiumization of the portfolio. So on the cost efficiency front, management has stated that they are doing several stuff in terms of setting up the ICML facilities. So basically they are the manufacturing plus the logistic facilities near to the market. So what happens is that your overall cost comes down if you are near to the market. So the margins are likely to improve here on a steady state basis, on a yearly basis, if you see for the FMCG business. But yeah, there could be some volatility on a quarter-on-quarter basis.
Priyam, before I let you go, let's talk about the stock also and the kind of action reaction it has seen of late after those, demerger talks. We did see a lot of swings there, but on a year-to-date basis, this one has really ITC is seeing about 35% odd growth. So how is one supposed to be? What kind of view one is supposed to be looking at with ITC and also other FMCG players? What is your view for them?
Sure. So if you see, if one wants to invest in the FMCG sector, like I said, that there are many players which are expensive in terms of valuation, HUL and Nestle's, right? And there are domestic players where there are good growth concern, at least in the near term. But if you see from our ITC, it is sitting on a sweet spot where the valuation is also comforting. Plus, we are seeing the growth levers for the companies in terms of earnings as well as in terms of revenue growth, as all the levers are on the firing for the ITC. And rest of the FMCG companies, though they are facing on in terms of demand, like in Q1, most of the companies have highlighted that rural is seeing some traction. However, the clear visibility would be seen on in a second half of FY24.
Right. So when it comes, yeah, go ahead.
Yeah. So that's it. So with the other FMCG companies, though we like it, but more we like the ITC because the valuation comfort is still there, the company.
So, well, you have to be looking at these FMCG players in terms of their valuations right now. ITC holding, or at least that valuation justified, one would say. But the other players, you may want to, wait and watch it out, especially for the FMCG pack. Rural recovery not adding up to what we really saw or thought it would be. But thank you so much, Priyam Tolia, for giving us your time and speaking with us here on Moneycontrol, giving us your perspective on how we should be viewing FMCG stocks or even that whole sector as a whole, and especially in anticipation of what we're going to look at from ITC in their Q1 results today. Thanks so much.
Thank you.
Well, also, there are quite a bit of other stocks that you need to be keeping on your radar, and we are going to be talking about all of those in just a bit, and also all the queries that you guys have been sending in. And to join me to do that and answer all of your views is Rajesh Palvia, the Senior Vice President at Axis Securities. Good morning, Rajesh, and thanks so much for giving us your time and speaking with us here at Moneycontrol. Let's first get the little bit of the technical part out of the way. We are seeing some bit of correction or consolidation in the broader markets, one would say. The Nifty, swinging or oscillating in those 19,500, 90,600 levels. But what are the charts really telling us? What are we going to look at in the Nifty, at least in this new week? A truncated week, though, but where are we positioning, or what are the key levels one should be looking at for at least the benchmarks?
Good morning. So overall, yes, there is some profit taking is happening. Nifty has marked a high of around 19,900, and now we are seeing since last couple of trading session, there is a sustained selling pressure in the index from higher level. Looking at the data setup now, Nifty is trading below to its important support area of 19,500. So that is giving some bit of cautious approach at the market. If we continues to hold below 19,500 level, then possibly furthermore downtick we can see in the Nifty towards 19,350, even 19,250 zone in the continuation of this downtrend which we are seeing since last couple of trading session. But if we analyze the overall setup for the market, that is on the bullish side only. If we analyze the medium term to long term setup, that is still in the bullish trend. Nifty is holding all its important moving averages. If we look at the monthly call put concentration data, the put base is still there at 19,400, 19,300 strike. So which indicates that, if we get any dip towards 19,300, there would be again, support buying action can be emerged in the market. On the higher side, 19,600 is likely to act as a steep resistance. Until we are not able to cross those level, Nifty is likely to remain in the consolidation range for some couple of trading session. Overall market breadth is positive. Delivery volume is taking place in mid cap and small cap, that gives us a sign of sentiment is on the bullish side only for the market. So overall, stock specific approach needs to be there in the market at the current juncture. Index is likely to remain in the consolidation for some more time.
Right, so consolidation mode is what is on, at least for the benchmark. But Rajesh, do stay with us. Let's address a couple of stocks that are going to be a buzz today in trade. One will that be of ONGC, after the state-owned oil and gas exploration company has reported a standalone profit about 10,015 crore rupees for this June quarter. Now, this versus that loss of 248 crore that it saw last quarter. Now, we also saw gross revenues for the oil and gas explorer at about 33,814, I beg your pardon, crore rupees. Now, this is a decline, if you go to see, by about 6.8% on a sequential basis. Whereas the EBITDA, that one has come close higher by about 50% at 19,458. So let's get Rajesh's view not just on ONGC but also another query that has been coming in from Vishal Thakkar, who's asking us about Coal India. Now that one also saw an earnings reaction, so we are likely to see these. But I'm clubbing both of these, Rajesh, together because we're looking at PSUs really. So how is one supposed to be looking at this pack? But also give us your view individually for ONGC as well as Coal India at this point.
So PSU stocks back again on the radar for most of the traders or investor post PM remark towards the PSU stocks. So ONGC, yes, if we analyze the overall setup for ONGC, it's in uptrend since last couple of weeks. Stock is showing sustained buying action. But at the current level, stock is struggling to cross its 180, 182 zone, which is immediate resistance area on the higher side. Once stock crosses above 182 level, then it will continue its uptrend, and then possibly it may scale up to the level of 195 to 200 also. So overall, short to medium term setup is bullish. If at all any dips comes near to 172, 174 is again, buying opportunity. 168 should be your stop loss, as the short to medium term setup for ONGC is on the bullish side, and we expect that, if any corrective action also comes, then it's again, buying opportunity for the stock. Coal India is consolidating since last couple of weeks. Again, stock is failed to cross its resistance area of 240, which is very important and critical to on the higher side. If stock crosses about 240 level, then it may scale up to the level of 255. That is the next target for the stock on the higher side. So Coal India, we can see some more consolidation for some more couple of trading session. Unless stock not crosses about 240, one should wait for that breakout to initiate long side position. In the decline, 225 is the important support in.
Right. Rajesh, do stay with us. Another stock that people need to keep on their radar today, will that be of Reliance? That's because the Jio Financial Services has, in fact, they've gone ahead and put that equal amount of shares that RIL held into and have been credited into the demat account of Reliance Industries shareholders. Now, this happened on August 10th, and it is said that the equity shares will remain frozen in the depository system till the listing or trading permission is granted to by BSE NSE for that designated stock in the exchanges. Now, Jio Financial, though, has applied to both BSE as well as the National Stock Exchange for these listings of these equities. So that is going to be interesting because this is something that is anticipated, and now that we know that these shares have been credited into shareholders' accounts, demat account, it is another step forward. So we are going to see some bit of action happen there. We're also going to see action in Uno Minda. Now, this company has commissioned its new EV or electric vehicle system plant under the subsidiary Uno Minda Bhuela Motors, or UMBM. Now, this one has happened in Haryana, and the plant will manufacture traction motors as well as BLDC motors for EVs. This could be two-wheelers as well as three-wheelers. So we are going to see some bit of action happen there. And UMBM has already received orders from various OEMs and is expected to start supply by Q3 of FY24. So we are going to see some bit of action with Unda Minda as well. That stock also you need to be keeping on your radar. But let me just bring in Rajesh back. Another query that we could address at this point would be that of Adani Ports, because there is quite a bit of action that we are seeing there. We heard that Deloitte has decided to step down as the auditor, and they've gone ahead and named another chartered accounting firm as they are a new auditor. And remember, Deloitte was the company's auditor since 2017. And after that Hindenburg report is what they are citing at this point, saying that, there was some concerns to do with that. Are we going to see some bit of action when it comes to Adani stocks again now with this new concern, seeing that the auditors have now stepped down? Rajesh, what is your view? And also queries coming in for Adani Ports at this point.
So series of news flow is giving impact to the Adani Group stocks since last couple of months. And again, this news will also take, again will give some impact to the Adani port prices in the today's session also. Though we have seen smart recovery in last 3-4 weeks from the 750 zone. And looking at the near-term, short-term setup, stock is in again in the bullish trend for near-term to short-term setup. But again, we have to watch in the today's opening what kind of price pressure we can see towards this news flow. And if at all again stocks corrects towards 770, 765 zone is again buying opportunity, as overall setup for near term is on the bullish side. 750 should be your stop loss if you are buying in the decline. On the higher side, 820, 825 is the key resistance area on the higher side. So again, one should wait for opening, what kind of opening we are going to have after this news flow. In decline, 750 is our stop loss. So don't buy at the current market price. If you get chance to buy a stock lower, then try to buy around those level with stop loss of 750.
Yeah, Rajesh, just before I let you go, I'm going to ask you one more query, because it has been repeatedly asked for your view on UGA Sugar, because we're seeing quite a bit of reaction on that stock. They're about 14% down it was in the last trading session. So could you give us quickly how should one be looking at this stock at this point? Definitely, with that that downside that it saw in the last session, how should one be viewing it?
So after gap down opening, there was follow-up selling in the stock prices. Now stock slipped below to its 50-day, 100-day moving average. Looking at the near-term, short-term setup, we can see furthermore, price pressure in the stock prices. 102 is the immediate support area. That is almost coincide with the 200-day moving average. So if it breaks below to 102, then furthermore selling pressure we can expect in the stock, and it may correct towards 90 to 85 level also in the downside. So till the stock not crosses above 115, 120 level, sell on rise is the strategy at this moment. And on the breakdown of 102, furthermore pressure towards 90 can be there in the stock prices.
Right. Rajesh, before we say goodbye, any top picks by you, any sectors that you would want to recommend this Monday morning?
So our pick for the day would be India Cement. Very strong momentum is taking place in the stock prices. Stock managed to view breakout. So we are bullish on India Cement, and we are projecting target of 265, 270 on the higher side. One can buy with stop loss of 242. Another stock that we like at current juncture, that is BHEL. Stock is holding 100 level, which is very important for the stock. And in the previous session, strong buying action was there. So we expect that BHEL can continue furthermore upside towards 108 to 112. One can buy with a stop loss of 100. So these two stocks we are focusing for today's session.
Right. So India Cement there and BHEL for Rajesh Palvia. Those are his top picks. But thanks so much, Rajesh, for giving us your time and speaking with us here at Moneycontrol. But seems like that's all the time we have on this edition of Morning Trade. But don't go anywhere. Stay tuned. Coming up next is Opening Bell.